2, 1.
Hello, everybody, and welcome back to another session of Anatomy of a Trade. Today, I'm joined by a special cameo appearance of Roman Bogomazov, our teacher, head of Wyckoff Analytics, and looking forward to hearing Roman's input. He rejoins me after a hiatus, and this is a temporary rejoining, but it'll be great. So looking forward to it. And today we're going to go over a trade that was done by Sergio, a WTC2 student, in a currency, a Forex trade, British pound versus the Japanese yen. So Roman, why don't we jump in and take a look at this trade?
All right. Well, first of all, thank you, Franz. Really good to be back. You know, Franz and I, we've recorded quite a few of those sessions. I don't even recall, Franz. I think it was something like 70 plus sessions together or something like this. So it's good to be back in this saddle and just looking forward to it. So, Franz, take it away. What do you see here?
Okay. Well, as we look at the setup, and we're just strictly looking at what Sergio saw here before the trade actually occurred, we see a background of a downtrend. And we see that we're making some sort of attempt to stop, seeing some shortening of the thrust. He's got a preliminary support and a selling climax mark there. And then he's seeing some sort of a uptrending trading range developing here. Although if we look at where the trading range carries to and what he's got marked as an upthrust after distribution, and his entry actually occurred on the very last bar that you can see on the screen. If you'll look across to where this upthrust after distribution occurred, as he's got marked, you'll see that there was a previous to the left area of consolidation that then broke, and we're not able to overcome that. And even farther over to the left, the larger area, all the way over to the left, where, yeah, even farther over to the left, yeah, that whole area, there's obviously supply there, and there's no real ability yet, at any rate, to overcome that, which we might want to see as some sort of a major sign of strength. So what do you see, Roman? What's your...
Well, I think that Franz's comment about the background is so important. I mean, this is probably one maybe of kind of like the things that needs to be mentioned here multiple times. First leg down, what do we have? Redistribution. And please note how similar structurally this redistribution is with what follows next, right? As a trading range, as a kind of like an attempt to rebound. In what way it's similar? I mean, obviously, the height of the structure is different. But the way how it unfolds, with higher highs, local higher highs, and higher lows is somewhat similar. There is even an attempt to upthrust right here into the end of the move. So I would be thinking about analog comparisons here. But we're continuing to the downside. We're still seeing that there is an increase of the supply on the downside. There is a stop in action, which is climactic. So I like that this was identified correctly. I don't know whether before or after the fact. And then obviously, as we go through this kind of trading range, and I would say like, yeah, you could definitely do this. Alternatively, you could define the range, like this is the range, and then you have this as a range. You could do that as well. The last bar right here looks also climactic. And it's a well-defined climax with the supply coming in right away on the change of behavior bar afterwards. And you kind of should pause here, because the background is still to the downside. As Franz said, the last breakdown was not overcome. It was upthrusted, but then the price came back below this resistance right away. So this was our sell-in zone. And then from here, you kind of conclude, okay, the background is to the downside. We have an attempt to rally above the sell-in zone. We fail on the upthrust with increased supply. So we still predominantly to the downside. Your trade should be to the downside at this point.
Awesome analysis. Awesome. So here we see, and exactly what we're taking away from the chart, that we do have a redistribution, and very quickly the trade fails. We do see that Sergio has a stop loss. What do you think about the stop loss location, Roman? Because there's been some questions that people have raised recently about, where do we properly place our stop losses? So what can you teach us about that?
I mean, obviously, my first remark is going to be, you want to learn about our Wyckoff stop losses, come to our classes, right? So WTC1. So that's number one. But that's a side note. Okay, so let's just assume that this is a trading range right here. And then let's just say that we're thinking that this is a sign of strength breakout. And it looks legit right here, just because we are breaking out, we're extending above the resistance. That's the requirement. But then the next requirement for the sign of strength to find the confirmation is the proper backup action. Now, the proper backup action will go down back to the support, which it did, and we'll see the diminishing volume signature. We don't have that here. So here we should be a little bit puzzled. Why is the volume increasing? So that's point number one. The next development should be an ability of the backing up action to start rallying. And we see this bar right here. So it looks like, okay, yeah, maybe. So from that perspective, if you're thinking that there is a support here, then our stop loss should be somewhere here. We should not give a lot of room here once we see this green bar. And I don't know if you guys see this on this chart, it's a little bit blurry, but once we have an attempt to go up, our stop loss should be here. And then after that, we should be just triggered to close the position. The second stop loss, so if we are not exiting on the stop loss somewhere here, should be at the close of this bar or at the close of the next attempt to go up. And I understand that there was probably just the logic of, I'm at the support here, there are multiple touches, there are multiple non-touches here, so we are kind of doing the same here. So I understand the logic behind the stop loss. This is probably like the third place where I would consider putting the stop loss or moving the stop loss to. So it's kind of like giving the position the maximum attempt to rally from within the channel and from the support area. Although this is a low or high failure, the next bar is the largest bar to the downside, akin to what we had here on the breakdown or here. So it kind of brings the bearish background back right away. Another point, Franz, that I want to make here really quick is that if you're thinking that this is the trading range, this is a sign of strength, a better trade could be just a breakout trade. What it does is, if it pulls you in, then most likely there's going to be some kind of continuation, unless you're going into another upthrust right here. But this way, you wouldn't be pulled into this trade altogether. Franz, what are your comments?
Well, great discussion, and I think the last kind of thing to throw into the hat here as far as stop loss placement, I don't remember if it was Jesse Livermore or Richard D. Wyckoff himself, but or possibly David Weiss, and maybe all three of them said, I enter at the point of maximum danger, and if the danger proves to be real, I'm gone quickly. And the maximum point of danger here is this support resistance, this heavy black horizontal line that was drawn. So I might be thinking about that as just slightly under that as my stop loss location, as well as just another way of looking at
Really good point. Yes. So where would be that danger point for you, Franz?
Well, the danger point, as you described, is after this attempt to upthrust.
Mm-hmm.
And as we see volume, especially that second, I mean, there's one volume spike with supply in it, and then there's a second one after, where the breakdown occurs. But before that, that first volume spike, if you carry that across to the left, that's one of the highest levels of supply that we've seen in this, this entire chart here, and that should certainly get your antenna up, thinking, should this much supply be coming in at this point, if I'm thinking that this is, if this is a valid continuation higher and, a reversal and an accumulation.
Well, let me also give you a quick perspective that I have on the danger points as well. I mean, if we are chasing for those danger points, what are those? Those are just like the lowest the lowest risk entries for us. And the question becomes, what are those? Where could we find those lowest risk entries? Unfortunately, all of them, or majority of them, are counterintuitive to what we want to do. Counterintuitive to basically human nature, right? Because as humans, what do we want to do? We want to be safe, right? Where do we save? We save when the conditions are showing us that there is some kind of change that has happened. From what? From the danger, which was the downtrend. So if we would go with the logic of Jesse Livermore, or with the logic of trading, because this is the logic of trading, when you start seeing conditions being formed in the favor of the reversal. So for instance, you are starting to see shortening of the thrust, and then you're starting to see climactic volume that is coming in. And then suddenly you see the first rally as a change of behavior rally. You know that this will be followed by the test. If the test holds, that's your lowest risk point on the trade that you're thinking, to the upside here. Of course, there should be a definition of the counter trade against the overall bias to the downside. So you're going to adjust your targets. You're going to limit your targets significantly. And you're going to be thinking about this area right here as the area to overcome. Therefore, it becomes your target. So from here, you're looking for that test. Where is the test? Test number 1, test number 2. So this and this are your danger points where that are proven to you that there is no continuation to the downside. And you could do this over and over. So for instance, here are your kind of like danger points turned into the points of entry. Here, after the change of behavior and on the test, this is your danger point turned into the test and turned into the point of entry. And from there, you're trading even against the trend in a much more comfortable position.
Great discussion. Thank you.
Absolutely. Franz, so how do we do the post-analysis?
Well, let's start with the visual recognition part and the bias. I don't think I'd give him a yes. I think I'd give him a no on that. What do you think, Roman?
Probably no.
Yeah, the downtrend was still, to be confirmed or to fail, and the reversal had not been confirmed. So the timing, I'm thinking potentially was okay. He did buy it after that reaction.
Well,
Maybe a 50-50.
In light of the danger point discussions, how would you rate that?
Yeah, it is a pullback to the old resistance that he's reading as support. So it's a reaction that hasn't been tested yet. So I guess I'd have to say no. What do you think?
Yeah, I would say so, because if this is a counter to the trend trade, I think the identification of the point of entry should be earlier.
Okay. Uh, the character, uh, no, I don't think he got the character correct. We didn't get a continuation to the upside. The point of entry as a long. What do you think, Roman?
Yeah, this is kind of difficult. I mean, like very, very short term wise, I see the logic here, but I mean, like my preference would be either here or here or here. So much earlier. So from that point, I probably would say no. But maybe like 50-50. So I'm
Okay.
kind of puzzled here.
All right. Why don't we go 50-50?
Okay.
He used a stop loss.
Yes.
So I think that would give him a yes on that.
Yes.
There's no opportunity for an add-on, and the exit was by the stop loss, so we give him a yes on that. So 2.5 out of 6, which is 2.5 divided by 6 is 42% variance. I think the comments, based on your observations and just remarkable discussion of where the actual danger zone occurs, would be to simply recognize that a successful test is a potential entry and is a danger zone. So that would be my first lesson and takeaway from this, which is really, really good one.
I really like your initial comment on the background. I think this is so fundamentally sound. What is your background? It's to the downside. So my first thought should be my trending trades are going to be to the downside. And if I'm trading the counter to the trend trade, then, I need to go to this comment about the potential entries to be earlier in that counter trend move. Okay.
Excellent. Excellent. So, in reviewing Sergio's comments, bias, no; timing, no; character, no; point of entry, yes. We gave him a 50-50, stop loss, yes; and exit, yes. And he's saying variance 0, but the calculation is actually 3 yeses out of 6 total. So it's, by his measure, his variance would be 50%, not 0%. And his comments, understand the candle and volume that negates a local breakout, and how the supply increase then must be tested. And a new emergence of supply or demand will be tested. Be patient. You do not always need to get the tops or bottoms. And again, go back and listen to the previous discussion that you made about a counter trend trade, and understanding the background and what the best point of entry in a counter trend trade is.
Yeah, well, I like this comment a lot. Why? Because there is a point of awareness. As traders, we will be encountering a lot of mistakes. It's just, our craft is very challenging. It's challenging from the analytical point of view, and then it's challenging also from the point of view of self-exploration. So I salute Sergio for bringing that awareness of how analysis could be improved. So we're seeing this, upthrust, the almost immediate emergence of the supply, lower high negation, of this area, and the negation of the breakdown. So maybe a little bit faster on the stop loss there, once you are in that type of trade, and so on and so forth. And then more importantly, Sergio, and this is the whole goal of this series, is to become aware of your mistakes as soon as possible, figure out what mistake is, and then try to figure out how to put it as a feedback back into your trading. So in other words, could I, on the next trade similar to this, on the next setup similar to this, not do this and be aware in the moment rather than after the fact? And with that, this is a great lesson. Franz, I'm so happy that Sergio is kind of like going through the process. And for those of you who are listening to these recordings, this is not just to watch. This is most definitely to do. So we encourage you not only to extract those mistakes from others, which is very valuable, but also do this process with your own trades. Franz, really great episode.
Thanks, Roman. Really good observations. Till next time.